everyone. My name is Yogesh Pandit. I'm the CEO and founder of Hexanika. At Hexanika, we are automating data management for regulatory compliance for financial services. We are doing that with our product, which has an embedded data platform called Smart Join that automates the whole data management process of sourcing data, consolidating all the way to the regulators. And we have built-in regulatory reports and rules that we maintain within the solution called SmartReg. Why we are doing this? It's a big problem. It's a $181 billion problem. And for some of our customers, we have shown that this cost of compliance can be reduced by 50%. In spite of spending all this money, you'll be surprised to know that financial services firms have paid more than 400 billion in fines. And at the same time, we have proved with our customers that we can provide better quality of data, timely reports, and 100% transparency around data. And the story becomes worst as you go to credit unions and community banks. They are actually dying. And we have showcased that using the same regulatory compliance data, perhaps we can provide revenue generation opportunities as well. Now, if you look at the landscape, it is ever changing. New regulations, new administration, new rules. Then if you talk to the leaders of the community banks and credit unions, you will see that the pain is really deeper. They are dying. There were 25,000 banks before Dodd-Frank Act. Now there are less than 10,000. And this problem is not solved. The current technology is not letting banks to be efficient. The data that is submitted into regulations is growing. The data that is required by the regulators is growing. And the operational cost of the banks is going up. Why is this a problem? Is because if you look at large banks, the problem is much manual, segregated, consolidated, fragmented, resulting into inaccuracies, inconsistencies. My former employer, Citibank, where I was responsible for sourcing data globally, has spent more than $19 billion in the last 6 years, has more than 30,000 people in the regulatory compliance space, and yearly cost of compliance is more than $3 billion. Last year, they are around $2 billion more because all the C-level had to leave the bank because of non-compliance. But as I mentioned earlier, the problem is actually much deeper when you talk to the smaller institutions. Although it may not be as complex and ugly, it is still very manual, leading into operational costs going up. And this is exactly what we are trying to fix in the financial institutions with our very simple product. If you see, we replace all that clutter with a data platform and our regulatory solution. The data comes in any type and any format. It is processed automatically, reported, and sent to the regulators. The first component that we have unique is our patented proprietary algorithms that actually writes the code automatically and prepares the rules and reports. The second piece is this becomes a one-stop shop. You give us the data, we give you the output with our pre-built reports and end-to-end automated data platform. That helps banks to submit the data timely and with 100% transparency. The next, we have a patented rules engine that reuses data for different regulations, not only that, for different revenue generating outcomes as well. So with that, proof is in the pudding. After the launch of 2019 of the product, in 2020, a large bank in the US went into production and we replaced 5 expensive enterprise products with one Hexanika solution on Redshift in AWS in less than 8 months. Savings of more than 50%. Another great example, RSM, which is the 5th largest accounting firm, we built an end-to-end AML analytics solution for their customers. And we showcased that not only they can build it cheaper with our no-code, low-code solution, but they can onboard their banking customers in a much accelerated and faster way as well. Another great example that I'm proud of is a hospitality company that uses fintech data. And we onboarded them in less than 6 weeks. with connecting reservation property data to fintech data to show revenue generation opportunities. I think the most proud moment for me is serving my ex-employer, Citibank, where we completed a proof of concept successfully. And this year, actually, we are actively talking. In fact, next week, we'll sign a deal for a production environment at Citibank. And there are many much stories of how we have successfully helped our clients to save money.
And we're at time, Yogesh, but thank you so much. I know those 5 minutes go by very, very quickly.
Thank you.
All right, Rob, you want to kick us off?
Sure. So Yogesh, thanks for the presentation. You have one of the challenges that we face with DealCloud when we're pitching. You have a very technical solution that you're trying to explain in 5 minutes, and it's really, really difficult to do. You have beautiful slides, but there's so much information on the slides that I'm trying to read all the information on your slides and then listen to your pitch. And it's a lot, especially in a 5-minute pitch for an investor to take in. So maybe I'm just a dummy here, but it's just a lot of information. So I don't know, I'm not exactly sure. You probably would want to work with someone to, I think maybe the one thing is just upfront explaining either a use case or maybe it's a real world example of exactly, and you did that a little bit with the last slide with, Citibank and some of the others, but maybe that's the beginning of your pitch so that you can really reel me in to understand exactly what the solution does. All that being said, I think I came to the conclusion is that you're taking all of this data that's probably in disparate databases, you're putting it into your own data warehouse, I think, and then you're using data visualization and report writing to produce these reports that are required. Hopefully I have that right. That's what I got out of it. But again, it's a pretty technical solution to have to explain in 5 minutes. The other thing is that I'm jumping to the conclusion, but your revenue is probably a combination of the actual software fees plus some professional services. So I'd really like to understand how it breaks down between, let's say it's a SaaS model and ProServe. And then on your traction slide's great. You got 4 customers that you can talk about, but translate that into revenue. How much money have you guys actually made? So here, I guess that's where we are with this slide. So year 0 is that 2020 or 2021? But it looks like you're making revenue. I'd love to understand the breakdown between professional services and any other means of generating revenue. You did do a nice job of explaining the pain. We actually owned a company called Reg Ed here at Falfurrias Capital for a period of time, and it was a compliance solution also. It's a big problem, and it's just getting more and more complex. So I think you can do one slide to explain the problem. I think everybody knows that it's a challenging environment to be in. And then, of course, my famous how you're different than the competition. I'd love to understand that. So over to you, Daniel.
Yeah, Yogesh, a fabulous job. I agree. Regulatory compliance is a complicated space. I loved your setup of the problem, right? That your automation of data management for regulatory compliance, that got me really very narrowly focused. Okay, now I know what you guys are doing, so I can pay more attention. I do agree with Rob's slide. I know this is always a painful thing, right? But having so much on a slide, I was busy trying to write notes, trying to pay attention to what was going on the side, trying to listen to you at the same time. And there was just a lot going on. I know you had a lot to say, and it's really hard to do it in 5 minutes. I really liked you're hitting that total addressable market, right? The 181 billion in compliance spend. And again, the assertion that you made that you can reduce that by up to 50%, and then you had some use cases to back that up. So I thought that was well done. I also love the fact that you brought up the $400 billion in fines, because unfortunately in this town here in Charlotte, we're near and dear to a few of those companies that have actually had to pay significant portions of that over time. So I also really liked, and I think I would love you to really hone in on this a little more, right? You were doing that breakout between the large banks and the issues they have and the army of people that they typically had. You were one of them, right, at Citi, who are allocated towards trying to solve that problem, and reinforcing that for community banks and credit unions that they had a big problem and they don't have the armies of people to throw at it, right? So it was one of those questions of, is that really your focus then? Is your focus those smaller banks, or is your focus the big banks, right? So that was kind of the question that led into. And I do think that smaller, that sort of bottom half of the market, if you will, is definitely something where if you could give them a platform that could automate that, that is something that would resonate probably even more so than some of the large banks. I'll come back to, I love the fact that you went in and did the use cases, and congratulations, by the way, of going back to your former employer and actually getting them to use their service. I know that's not an easy thing to do. And it's also a nice, very nice referenceable account. So congratulations on that. I'll go back to Rob's list of 8 things that he likes to see in presentations. He mentioned we were missing the competition. You were clearly going to get to the revenue. You just ran out of time. So you had that one checked. But the one that's still my favorite, right, and one that I want to see more, we got a little bit about your background, but we didn't hear about the rest of the team. So I'd like to have seen more of that. And you were going to get to it if you had time. So, but great job.
Okay, thank you. Shall I start addressing this question? So first, I think let me get to the competition. The names, the logos here, as well as the logos on this slide indirectly are the competition. In the large banks, typically it is number of products, as we have replaced in Citibank or Citizens Bank. In smaller institutions, typically it is a compliance solution like Water Coors or Actimize or Galvanize, something like that. So that's my competition.
Yeah, so Yogesh, those are big names. We know those are household names. So the question there was, how do you win? How do you beat them?
That's right. And in the large banks, it's typically, we showcase based on cost savings that we can replace all this. For example, at Citizens Bank, we are showcasing that in the next phase, we can replace SAS for RWA. And the product has that capability to do it. So purely it is pain-driven sale at large institutions. And as Daniel correctly said, for smaller institutions, we launched actually a fair lending solution last week with a very focused compliance. For them, the sale is different. And for large banks, the sale is different.
Great. Do we have any other questions? Last questions?
Not for me. I'm not sure if the audience has any.
Okay. So in addition to the explanation, one thing that I would say, Rob, when it comes to selling, we are actively using our partner network. We have formed great relationships in the last 1.5 years with FIS and IBM. We announced partnership with AWS. And in fact, all these partners are actively talking to their customers, and we are getting pursuits through them. So that's another way of winning the customers. One of the way to win is collaborate with the competition.
Awesome, Yogesh. Thank you so much for your pitch.